Hello and welcome to Wyckoff Training Academy. Uh, in this video, I'm going to discuss about as I'm done with all the allotments of indicators and closed on all the trades. So what I planned is as I trade XAUUSD. So what I have planned to give daily or if possible daily reviews of the trades, or if that is not possible, then I'll be giving weekly reviews of the trades so that uh, the students who have bought things from me or opted for the course can get the application side of this thing, how I trade and how I look into a trading opportunity. So in yesterday video, like 2 days back, I have uploaded a video 1 day back regarding this particular trade setup. So what I'm doing is I'm uh, taking whatever trades I got in this entire week, that is starting from 31st of March to 2025. So how I got into a trade and why I got into a trade, so that you'll understand the application of this accumulation and distribution tool and price and volume trend uh, devised from the work of David Weiss. And based on this tool, how I assess the market and how I use 155 version, that is my day trading certificate, for assessment of demand and supply in the market. So all in all, I got, I think I marked the trades with the arrow of the entry points with the arrow, blue for a long opportunity or a buy trade, and as red for fuchsia or magenta color for sell or short opportunity. So this thing apply to your market as well. Just have to understand understand the logic behind it, how I'm opting for a trade, and you can look out for trading opportunities in in your own market. Like for example, if you see like for 1, 2, 3, 4, 5, 6, 7, 7, 8, 9, 10, 11. This one is 11, and then 12, 13. Almost 13 trades in this entire week, and based on 5 minutes. So now what I've done is I've set the alerts in this one, because my main trading criteria is either distribution, accumulation, or accumulation or redistribution, which is based on Wyckoff price and volume correlations. So once I get this thing, and once a label has been printed, I get an alert, and after that I can look into the market and look for a trading setup. If my price and volume trend, uh, which gives us a clear indication whether demand is in control or is supply is in. So what does this thing do? Does it if demand is greater than supply, we will get uh, a green color histogram. If supply is greater than demand, then we will get complete red histogram. So this is what I look out for, and just we will see how the trade setup and how I got into trade. And again, in coming videos, I'll explain how I execute the trade. Like one of what you can say, a parameter for me to execute the trade, or you can also plan for that in the trade also. Like we got the distribution, the day started from at this particular point, that is 31st March. So now I'm selecting trades based on what the market has, as per the laid down principles which are set by me, or you can play around with these indicators and you can set your own rule, make a set of rules for your time frame and for your you could say, like if you're trading in Asian market, if you're trading in Asian market, if you're trading in uh, US market, if you're trading in uh, like any Malaysian or in other markets based on your instrument selection and based on your capital and everything. So apart from that, if you're trading XAUUSD, you choose your session, which Asian session, like UK session or US session, your or like Tokyo session, which session you're planning to trade. So let's dive into this how I assess this situation. Like for example, I got an accumulation at this point. Once I get an accumulation, I get an alert. And based on the alert, I am looking out for an opportunity either on a sell side or either on a buy side. So like you can see, it clearly suggests either this is a distribution or a reaccumulation. So once I get a redistribution or a reaccumulation concept, I look for the price bands. Where does this thing stand? So I got a selling opportunity at this particular point, but uh, I've considered buying opportunity from this particular, after considering it as an accumulation or reaccumulation. So because we got another, like, we got the first distribution which was not held and market has been like taking fell down, and then this gives me an idea that if this is a reaccumulation, then market will come down and it will eat away all this liquidity from this particular point, or which is held in this particular area. Now, many people, I'll do one thing. I had a few insights into your trading, and I'll share my opinions, like what I have seen in market. What market normally does, like for example, if there are many people believe that liquidity hunt are always taking place above the pivot points. That is not the case. The market has completely changed. Liquidity hunt is something where everyone knows that they have their assets or stop loss placed above or below this one. Now, market has a tendency to, if you see, whenever there is a level in form, market will come down and it will test this particular level. Like for example, in many people they use ICT concepts or smartphone concept. They know fair value gap and all this stuff. They do this kind of studies that emerge from this one. That the fair value gap, or you can say imbalance zones and whatnot. All these things has come out of those observations. So I don't trade based on fair value gaps, or ICT or anything concept. I look just generally look out for what is the market going into a distribution, or is the market going into an accumulation phase. This is what I'm concerned about. If this thing is happening, then I would look for an opportunity. And if first opportunity sustains, if this is a distribution, then I want to look for another distribution or a deaccumulation or redistribution taking place. If that is not the case, then that means this one is negating that market is going to go upwards. To try and understand this point, don't jump into a market based on one simple trade. Like you are here, you got the indicators, got everything with you. So look for the market to prove you wrong in your analysis and go against it. So now many people go with the bias, like if the market is going to go upwards or if the market is going to go downward, then only then I'll plan the trade. What I look out for, I look out for simple continuation of what my analysis was previous. So was at the initial point. Is it in line with with my analysis? If that is not the case, then I would look for another opportunity wherein things would align together. So now, a few minutes back, or few seconds back, I told you uh, to look for negation of your analysis, because there are two ways of trading. One way is you set a bias, and if market is going to go up, then you plan a trade, upward trade. The other way of analysis is that when market you are doing your assumption that market is going to go upwards, but based on all your analysis, whatever analysis you have done. So based on your set of rules, if market is turning against you, this means your analysis is not your analysis has been negated by the market. And this is also a confirmation that if this is not happening, then for sure market is going to go down. So there are two mindsets which are which there are multiple mindsets that traders come along with, but these are the two common things which traders look out for: either confirmation or either negation of their analysis. So what I normally like to see is like once I set my analysis, then based on that I want to see market reacting that way, and I picture how that particular market would look like. So like for example, I got an distribution or reaccumulation based on my analysis that this was not this didn't resulted in a markdown or a downtrend or a price fall. So I'm expecting price to look for another reaccumulation at this particular point, and it happened. And here I was looking out for entry based on trend up, then a first pullback to this side, then a second pullback. Just two entries which I got in on like on 31st of March. Now many people or many students they bought multiple indicators from me. So they might be thinking like few of them has opted for this tools. So what about those indicators? Every tools and everything works excellently very well. It is you have to decide which thing suits you and which thing fits into your trading criteria. So many people were asking me to give a solution so that there should be a common trading or best possible simplified solution because I've made very complex tools and many different tools. So many people ask me to give them the solution so that they should get a simplified version of my trading way of my trading so that they can plan the trade. So instead of going for multiple like whatever indicators you have got, you can plan your trades. Like many of my students have come up with different trading styles and trading techniques, and they are doing very well. So this is how I got into this particular trade. Like for example, and if I'm averaging and not averaging, if I'm adding my trades, just wanted for like around 20 pips or 30 pips, like more than what the stop loss is all about. These are the two trades. I'm not doing the averaging. Now, this went in this particular direction, but that doesn't mean that you would get this much of the, one would wait for this much of like with the patience. But if you know what your analysis is all about, initially you will take small profits, but once you are well versed with the tools, you will wait for, or you can wait for bigger profits because once you get into a trading with this, like once you get into trading with the tools and with the set of rules that you set or you copy my rules. So based on that, you can play around with small lots. Then later on, you can look for like uh, based on your capital and based on your risk appetite. You can plan your trading opportunity, like trading lot size, as well as like most commonly people trade with 0.10, 0.20, which is a very huge quantity, a huge lot size for forex. But you can initially start with micro lots like 0.01, and if you build your account, build your confidence. It will not build your account, but it will build your confidence. Once your confidence is built, you can play around with. You can multiply your quantities accordingly. Like for example, like this after these two trades, I got like I got this solution, but I haven't got my trading opportunity because I normally look for a green candle with green triangle for buying opportunity and a red candle with red triangle facing downwards for selling opportunity. I haven't got. Plus, there are multiple things which I can which I looked into this particular trading opportunity, but I haven't got yet. After that, I got a one buying opportunity after this accumulation, which was taken as some this particular degree. And many people would argue when you would say this is a buying climate, this and that. So, okay, to consider it a buying climate, you can uh, uh, add many things to it for your confirmation. I can say like uh, even if it is a buying climax or a stopping value kind of activity or whatever you want to name it. For me, it is an accumulation or either redistribution. So if it is an accumulation, then I want to see the price moving upwards. So I picture the movement in my head, and like I like to see opportunity. I got an opportunity at this particular point. So if I zoom in, you can see I enter at this particular point. So now you would ask, where is my stop? So stop is something very subjective, in like based on your trading style and based on your risk appetite. So for some people, your stop would be here. Some people would place a stop over here. Some people would place a stop over here. Because again, it is subjective in nature. Everybody's risk appetite is different. Because what I look into is like, as I have mentioned in a previous video, I only look into once I get into trade, how many times market goes in my favor. That is what I'm looking out for. If my stop is over here, and if I'm getting 1 is to 1.5, sometimes I'll get out of the trade. Because after a nightfall of this kind and a sluggish movement towards the upper side, I was expecting high movement, and there are many other things which I was expecting if this market has any potential to go upwards. Though that's the reason we have another secondary test taking place over here. So that's the reason we got another accumulation at this particular point, then a redistribution, then price went upwards, or this is a reaccumulation. So after this particular point, I got whatever profit I got. I have like let's consider this to be a break even. Simple. One break even trade, two profitable trades. This is now. This is a very beautiful trading. This is a very beautiful opportunity. Like I'm getting an accumulation. Here was an accumulation, and prior to that one also there was an accumulation. So three accumulation point, that means that it's suggesting that there would be a bounce back from this particular point. I'm expecting a potential opportunity. I was expecting it somewhere here, but it didn't happen. But I got an opportunity. This opportunity, I entered into the trade. I know where to exit the trade in this particular case. And if I see, I got a distribution of reason kind of thing over here from the year or from the year. So this resulted in somewhat good profit for me. Like I said earlier, and I always say, I will always look into like, this is the maximum, like between nine pips, or you can say 90 points. So this was a trade. Then this is a selling trade. I got in like over here. I got distribution. After distribution, I get an opportunity at this particular point. I sell based on this criteria, and I get a selling candle over here, and I short over here. So I short sell over here. Again, same thing. This is a buying opportunity, accumulation at this particular point. I got an opportunity over here, this trade. So watch closely whenever I'm initiating a position. I am only concerned about, is the market going in my favor, or will it go in my favor? How much profit does it going to give me? That let the market decide for that. What I'm concerned about is the market going in my favor. What I look to see based on my start, I like to see 85% of the time market should go in my favor. If I'm then only then I'll look out for a trading opportunity. Otherwise, if I'm not that much confident that this market will not go in my favor, then I will not execute the trade, or I will not get into the trade. Even if I'm sitting idle for a whole entire week, because market is not going to end. I have an expiry, market doesn't have. So once I get an opportunity, I'll get into the trade, and from next week onwards, I'll be sharing swing and like swing trades and trades on 1 hour time frame, so that you can also understand how much potential is there in this market if you know how to trade it properly. But this is videos for educational purpose. I don't give any advice, and neither I recommend anyone to go for this thing. But rather, I want you all to be a professional trader, and please consult your financial advisor before initiating any position. So I got into an opportunity over here. Now this is the tricky part. You would say why there was nothing in this particular context. Like we have a demand coming in, then a supply, then this would have been the position. So I always look for a first pullback after an accumulation or a distribution or reaccumulation or a redistribution. So once I got into this opportunity, I was of an opinion that this would might come go downwards because we already failed over here in accumulating. That means the analysis shows that market is going to go downwards, and like failure of one thing means that second thing is confirmed and it will happen. So based on that analogy, I entered over here at the end. Sometimes you have to see the market moment and read the. And if a person knows how to read 150 which you take reading, then he would understand this market is damn sure going to go downwards. So this is second entry, then the third entry after 3 times we have attempted the accumulation. That means buying is taking place in different places. That's the reason we have this much of price movement towards the upper side. I got entry into this one, and then based on this entry, this much was the rally which happened, and I would have if nothing would have in my favor. I don't have any levels to back my targets. Then I would simply exit based on whatever the signal opposite signal appears in the market. So same thing happened over here. Again, I got a beautiful buying opportunity. Then here is I would enter over here. This might be also a big given kind of a trade because we haven't got anything over here. This is also a big given kind of a trade. But I got around 11 pips. That is like that is more than one can ask for in 5 minutes time frame that will go. So again, I got this is already discussed trades. This is the second entry, first entry. So then it is based on distribution and then failure of accumulation. That this was much more. I was expecting price to bounce back, and it did to some degree. And then once it failed, I got an entry over here. So I'm not running after tricks, and I'm not running after every penny or after every point. What I'm looking out for an opportunity wherein I'm comfortable and consistent, and my analysis either it goes in the favor, market goes in my favor, or either market prove me wrong. Then in both the ways, I get the winning situation. So I hope you people might have enjoyed this video. Please watch it. And all my students, I request all my students to watch the videos again and again so that you can refine your trading skills. Thanks a lot for watching the video.